So welcome back to Dapp University. So today we're going to talk about a huge win for Ethereum and the entire Ethereum space as a whole. We're going to look at the crypto markets, kind of tell you my opinion on what I think is going on in this space. A lot of the news updates that have happened since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just turn on notifications down below. Subscribe to the channel. You'll find out about those whenever we go live and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below just impersonating me. I'll never give you my phone number or ask you to invest with me. All right, so we got people jumping in the chat here. We got Culture Hive, Automatic Beats, Nathan, Jam, Aaron, welcome. The Rohan, welcome. So today we got a little bit different setup. My normal camera has a slight malfunction, so I'll get that fixed for our live stream next time. Hopefully, I'm on my just regular old laptop webcam here. It gets a little jiggly on my stand, so hopefully this is okay for everybody. But let's go ahead and get started here. So let's talk about something that's a pretty big win for the Ethereum space as a whole. So yesterday, we got news that Reddit is launching their community points on the Arbitrum scaling solution. All right, that's the first thing I want to talk about today. We've got a lot more to look at, but that's the first thing that really popped out at me yesterday as I was watching this space and seeing just the rapid development that's happening day in, day out. I mean, it's crazy how fast everything is moving in this space. It seems like every other day something really important comes up, and that's the reason I keep doing these videos, is to keep you all informed. While everybody else is kind of like pieced out, not watching the crypto space right now because the prices have gone down. Well, now's the most important times to actually pay attention, because this is when a lot of the exciting stuff happens. So yesterday, like I said, we saw Reddit settle on Arbitrum as a scaling solution for their community points for their application. So what is this and why is it important? Like, what does this even mean? So I actually made a video on community points last summer when they first announced them. So basically, community points are a way for people on Reddit, the social media website, to actually have a blockchain-based token or a reward system for using the application. We're experimenting with what's possible with blockchain technology. What kind of incentives can we put in applications to get people to use them? Like, what's going to work, what doesn't work, what can foster community? So Reddit was a leader in this space, and they launched this initially for a few, hardcore subreddits. I believe it was the cryptocurrency subreddit and also the Fortnite subreddit. I think those were the two that initially launched with. But it was a big deal when they launched, because they were like, hey, what platform are we going to issue on? We're going to use Ethereum. So that was the initial step in that right direction. But then at some point, we were trying to say, hey, these community points, we want to scale these. And now we're at another critical decision, like which scaling solution do we want to use? Because right now, I've been talking about a lot in these videos about how we're at this fork in the road, and the competition's heating up for who's going to be sort of the de facto scaling solution for Ethereum. Or is that even true? Like, will we see a handful of different scaling solutions prevail over the long term, or will we see one, maybe two, dominate? And so the fact that we see Arbitrum in the lead here with Reddit as a major provider is a big deal. Okay, so let's just look through their kind of tweet thread here. So we're ecstatic to announce that Reddit is scaling community points on Ethereum using Arbitrum. It was almost a year ago that Reddit, together with the Ethereum Foundation, announced the Great Reddit Scaling Bake-Off to scale community points on Ethereum. So I remember this competition when it first came out, like as I was saying, it's about a year ago. The bake-off was a significant step for the ecosystem as a whole in bringing traditional web to the Ethereum ecosystem. Seeing how Arbitrum could support was extremely important to our team. So we baked something, and then they've been an absolute pleasure to work with, big milestone, all that type of stuff. So yeah, I'm totally with you 100%. And one reason this is important is because I think we're at this inflection point where we're going to start seeing more applications actually launch on these scaling solutions to make Ethereum, to realize new potential for what you can even do with blockchains in the first place. Because something like community points is going to require faster, cheaper transactions. Again, one of the biggest complaints about Ethereum, and one of the things holding it back from a lot of mainstream use cases, is because it doesn't handle the load of lots of users wanting to use it at the exact same time because of the fee problem. So basically, if a lot of people want to use Ethereum at the same time, the fees increase because they're based on supply and demand. So if a lot of people want to make transactions at the same time, it costs more because more people are wanting to demand to use the network, and therefore the fees increase. But when you introduce, and some people think, hey, we have to wait for Ethereum 2.0 to fix this. Who knows how long that is away? But like we've talked about time and time again on this channel, that problem can be fixed with layer 2 scaling solutions where you build the second layer on top of it that offloads some of the computational overhead of the actual network itself. My light's like kind of mess up here. Offload some of that computational overhead, does those transactions, makes it faster and cheaper, and it opens the door to new possibilities like community points, because who knows what a community point's worth? Why would you want to pay $5 to move community points around or transfer them to a different wallet or to a smart contract or something? So it really is a big deal that we're starting to see this inflection point, and I'm super excited for where this is going to take the technology in the coming months. So what do you all think down in the comment section below in the chat? Oh, somebody talk about the Rune hacks. Yeah, we can talk about Rune here in a minute. Yeah, totally. So let's actually go ahead and look at the crypto markets today. We got lots to talk about, but I'll go ahead and do that. Oops, sorry. Sorry, let me change my chart here on my screen. Okay. So let's go ahead and look at the Bitcoin chart here. So let me pull this over. Sorry, hold on. All right, so Bitcoin. We're kind of at a moment of truth. We've seen encouraging, relief in price for the past couple days. We see some green candles here. We saw a nice big green candle during the B word conference, right? That it kind of changed the momentum, at least in the short term. But tell you what, I'm not getting too excited until we climb above these resistance lines here. So we have our moving averages on the chart, which is basically Bitcoin's past price performance compared to its current price performance. If like I said, I'm not a super sophisticated trader or technical analysis, kind of guru, but just some really basic stuff is, I'm not even that good at drawing the charts here, but, we got basically a downtrend here. Okay. And, until we can firmly get above that downtrend, I'm not getting too excited in the short term. Okay. So in addition to these, moving averages as resistance, we have a pretty clear downtrend on the chart. I want to see us break above those. And honestly, before we start to see any kind of recovery in cryptocurrency prices, we'll probably see some sort of consolidation period where, the first step, in my opinion, would be getting above some of those moving averages and, finding some support or, the price action moving around a support level rather than a resistance level, and seeing some of that consolidation for a little while before things get too bullish. Okay. So, I could be wrong about that. Another possibility is we use this as resistance, and then it kind of see this another maybe rounded top, or maybe we go above a little bit, and then we just see another leg down. This is one of those times that it's really hard to read. I see a lot of people totally split on which direction this could go, but those are the two main outcomes that I see. So we can look at the ETH chart. Let's see here, ETH USD. All right, so same sort of story on ETH. Everything's pretty correlated right now, unless you had an exploit on your protocol. That's really tragic. We'll talk about that here in a minute. Yeah, same story with ETH. I'm not getting too excited. I don't think ETH is just going to lead the show or anything. If Bitcoin's still in this bear trend, everything's pretty correlated with Bitcoin at the moment. So let's look at something else, a couple other things that they were pretty bullish that I saw come up yesterday in the overall space, which is, let me find the article here. Let me just find it. Hold on. It escaped my screen here. Let's see if it actually pulls it up. Let's see if I haven't hit a paywall or not. So yeah, I do hit a paywall. Let me try it one more time. So we'll see if I can bring it up before it goes crazy here. So huge news in the crypto front. So JP Morgan has now offered crypto trading to all clients, particularly retail clients. Okay, so I've seen different versions of this. They kind of do the headline a different way. Let me just find it. I think I saw this article yesterday that was pretty good. So here you go. So JP Morgan Chase gives wealth management clients access to Bitcoin and Ethereum funds. So in brief, so this is big because we've seen a lot of different stances on crypto from JP Morgan in the past. I said some pretty bad things about crypto pretty famously. But now we see a pretty big pretty big change in stance on this, that they're based on demand, we're allowing clients to get access to it. So JP Morgan this week gave its advisors the power to buy and sell crypto products for its wealth management clients, according to Business Insider. This means JP Morgan clients can invest in grayscale investments. Okay, we talk about grayscale a lot on this channel, and also Osprey funds. So clients will have exposure to Bitcoin and Ethereum through these investment products. So what is this? So basically, we have wealth managers who are managing other people's money who are going to get exposure to cryptocurrency through these trusts and investment funds. I talk about grayscale a lot in this channel. I made a video last week. People were kind of worried about the grayscale Bitcoin unlock happening and what that might do to the market. Could that have sell pressure on the market? But anyways, Grayscale is a way for institutions and traditional financial people to get access to Bitcoin without actually owning Bitcoin. They basically buy shares in a trust that holds Bitcoin inside of it. Also for Ether, we've seen lots of other digital assets be purchased by Grayscale as well. They famously said that they're committed to, launching an ETF, all that type of stuff. We've seen a lot of people throw their name in the hat for ETFs in the United States for Bitcoin and other cryptocurrencies. So anyways, why is this a big deal? Well, number one, we talk about, how do we move the needle on cryptocurrency markets? Like how does the price go up? Well, it's the same people here have to buy more. We have to bring in new people, all that type of stuff. And this is a big deal because, this can bring more people into crypto, right? People who have been interested in this but don't want to, sign up for an exchange, people who have wealth managers, maybe people who just want to make more money. They don't necessarily care about crypto, but the wealth managers know that they can potentially make money with crypto, so they're able to, participate that way. So, this is a big deal. And some people get upset because like, hey, well, we want people actually like using the blockchains, using all that type of stuff. My whole stance on this is basically, you're going to have plenty of people who invest in stuff that they don't use. That's okay, in my opinion. It's sort of like the institutional debate on DeFi versus, institutional versions of DeFi. At the end of the day, we want to build things that people want to use however they want to, right? You don't want to control how somebody else uses crypto. Somebody wants to get crypto through exposure through a trust. That's fine, as long as we have the option for people to get exposure to crypto the native way. That's fine too. It's just like a vast majority of people are going to buy cryptocurrency on a centralized exchange and never take it off the centralized exchange. People who are just buying Bitcoin and holding on to it. But the people who want to buy it and custody it themselves and, go the extra mile, we just want to have that option on the table. And so this is a very similar type of thing, but the big positive here is this can actually bring more people into the space. Okay. And it's also just legitimacy, right? The fact that now JP Morgan's wealth managers can buy crypto for their clients. I mean, that's night and day difference than this space was 2 years ago, right? Like they wouldn't touch that stuff with a 10-foot pole. But yeah, it's this huge legitimacy. And if you're newish to crypto, like maybe you got in this year, in the past maybe in the last year or so, this might even start to seem commonplace. They're like, oh yeah, that's normal, but it's not normal. Like this is something that would have never happened in the past. And it's a sign of a pretty big inflection point about how society views cryptocurrencies and blockchain technology and the legitimacy of what's happening here. Okay, so it's a pretty big paradigm shift, and this is an example of that. All hypocrisy. Yeah, I know there's some people who have pointed out some pretty blatant hypocrisy. I won't get too far in the weeds of that drama, but yeah, definitely. So another pretty big, important piece of information on in the Ethereum space is about Ethereum 2.0. So I got actually a video coming out later today about Ethereum 2.0 and what you need to understand about that. But one critical piece of information in the short term is that the upgrade for Ethereum to move to proof of stake, which is called the merge. Basically, this is where we transition from proof of work to proof of stake. All right, it's a pretty big item on Ethereum's roadmap, has been formalized into an EIP, okay, or like a pull request on GitHub that formalizes, this effort. So that's how Ethereum works. Some people say like, hey, well, who runs Ethereum, right? Is it like a company that builds Ethereum? Well, not really. Ethereum is it's coordinated in a decentralized way, and basically, if you want to change Ethereum, you create something called an Ethereum Improvement Proposal. That's what EIP is. So you might have heard of EIP 1559. That's the big improvement proposal that people are excited about that burns Ether. Helps reduce the supply potentially if there's enough activity. Potentially has a price impact on Ether, assuming that more people want to buy it. All that type of stuff. That's an EIP. It's an Ethereum Improvement Proposal. And those get included into the protocol when people essentially vote on them. They propose it. At the end of the day, people who run the Ethereum network, people who run the clients, have to get the software and actually update their clients and, go with what the consensus is. And that's kind of how Ethereum works. People are economically incentivized to do upgrades that are for the good of themselves and also the network. Okay. Sorry, let me just mute the spam here. Guys, if you spam in the chat, I'm gonna mute you. Okay, so anyways, got distracted by that. So anyways, what I was saying here is that's how Ethereum goes through upgrades. It's basically make proposals, people vote on them, the software gets upgraded. You can not upgrade or you can upgrade, but vast majority of people are going to upgrade. So anyways, the reason I brought this up in the first place is EIP 3675 is for the proof of stake, the merge. This is when we take the Ethereum chain that's being built right now for Ethereum 2.0. It's actually live. It's actually running. It's just you can't really use it right now. We're using Ethereum 1.0 right now. We're going to merge that chain back into ETH 1.0 so that it can turn on and that we can start using proof of stake. And that's when basically you're going to be able to stake your ETH natively on the network, earn a passive income reward for doing that. The miners are going to get replaced by validators, and they take their Ether and they stake it into a node to validate transactions. And that's how they run the blockchain. Will smart contracts move from ETH 1 to ETH 2.0? Yes, the state will be migrated. It's not even really migrating, it's merging. Like, we're just merging it in. So another thing I want to talk about is I saw this come up recently. I'm actually going to make a video on this too, kind of deep diving in this and what you need to understand. So watch out for that video whenever it comes out. Subscribe to the channel, turn on notifications. But I saw the article come out, and I thought it was pretty interesting, okay? So this is Mark Zuckerberg, from Facebook, CEO of Facebook, talking about how they're majorly betting on the metaverse and sees Facebook long-term transitioning from, a social media company to a metaverse company. So I'm going to make a video on what the metaverse really is and deep dive into it and why this is such a big deal, because it really is one place that people are betting on blockchain technology going for the long term. But this is a pretty bold statement, right? And so sometimes it's hard to know if the CEOs are just being really bold and all that type of stuff, or if it's, sincere. But if you take it at face value, it's a pretty big deal. Changing Facebook's mission from becoming a social media company to a metaverse company, if that's true at face value, that's insane. So what does that mean? Well, think about what is the metaverse in the first place. Well, basically, it's a new digital realm that's kind of like the next evolution of the internet or cyberspace. So how it basically is taking, if you think about the internet right now, is like the 2D internet, right? Like you go to a website, you're on YouTube like this, you go to one website. It's a page, it's a silo all within itself. and you watch a video on that page, right? Or you get on Twitter and you scroll down and you like look at tweets. Well, you're just reading like text, in sort of two-dimensional format. You're looking at pictures, all that type of stuff. Well, the metaverse kind of changes that. It actually creates it kind of mixes in virtual reality, augmented reality to have a really like a new space where you kind of drift in and out of all these different places. And you kind of experience a new internet or cyberspace in that way, actually in this kind of new realm, rather than just like these like websites that you go look at, right? Or these apps that you look at on your phone. And so what would be an example of like web way of thinking right now versus metaverse way of thinking? Well, right now, if you want to talk to somebody, face to face, then you might get on a Zoom call, right? You might say, hey, here's a Zoom link. Let's meet on Zoom. But in a metaverse way of thinking, you might say like, hey, let's go meet up at the coffee shop in the metaverse and talk. And when we're talking to each other, like, on Zoom, you either see the person's, if they turn their camera off, you see the avatar that they've chosen for themselves. Or if they turn their camera on, they see themselves. Well, in the metaverse, you might see like a 3D representation of themselves, right? Like you're actually talking to the person. Or you might see like an avatar version that they've self-constructed of themselves. I mean, this really changes things because one reason I think it's really possible is it changes people's it plays off of people's desires, because people desire to represent themselves in a digital way in their own image that they create, rather than what actually reflects reality around them. I mean, you see this all the time with people who like think about anybody whose social media picture looks nothing like them in real life. It's like the most flattering, perfect angle, and then you see them in real life and it looks like nothing like their picture. So that's already an example of that. Or maybe you see people who have a cartoon like stylized version of themselves that doesn't quite look like their physical representation. Like it's more flattering. It's more how they desire to be than how they actually are. Or maybe they choose like an NFT avatar picture that they like, that projects the best qualities of what they desire to be. And the metaverse changes that. It takes that to the next level. And it total game changer. And so anyways, we're seeing, Zuckerberg talk about Facebook pivoting from being a social media company to a metaverse company. And again, if this is a face value, then this has a ton of future potential. And so why does blockchain come into this? Well, blockchain, the thing about the metaverse is it's going to be a large shared open space where people build on top of it and everything kind of intermingles into one. And blockchain is how you actually take ownership in the metaverse, and you can carry things from one to another, right? If you want to own something in the metaverse, you can own it on blockchain, and then you can, move in and out of each place in the metaverse that way. So let's see here. This my light is too bright. Yeah, I know. My normal camera's not working, so I'm having to use my webcam here, and this light kind of blows my face out on the blows my face out on the regular webcam because my normal Sony camera's not working today. Okay, so definitely, I'm going to do a deeper dive on that because I think the metaverse has a chance to be a lot bigger than people think it is today. So I'm going to do a deep dive on that. Check out that video when it comes out. So one thing we did see come out yesterday on Twitter world was basically the release of the new Twitter emoji, the new ETH emoji. Let's pull it up here. I don't know if anybody else saw this. Hold on. So basically, if you get on Twitter and you do hashtag BTC, I'll just show you right here. Twitter automatically adds these icons next to certain hashtags. And so, famously, I think it was last year, Bitcoin got a B, sort of emoji that pops up whenever you do hashtag Bitcoin. Okay, or maybe it's hashtag BTC. I can't remember. I don't really do it that often on Twitter. Of course, this is Jack Dorsey, CEO of Twitter. And then yesterday, people found out that whenever you type hashtag ETH, an Ethiopian flag comes up. And so, looks like Jack did a little troll here on ETH by showing the flag and then showing the ETH hashtag. Now, I've seen lots of different theories of this online that, like, I don't think this hashtag and this emoji was created just to troll ETH, okay? I think a lot of people think that the hashtags and the emojis for the three-letter symbols were basically created in honor of the Olympics, okay? So you could use a hashtag for your country that you're rooting for, and you'd see their flag next to it. But I think it was just sort of an opportunity that, there's this coincidence, this naming conflict between ETH and Ethiopia. So now this flag, I think Jack just saw it as a little opportunity to take a jab because he doesn't have very many nice things to say about Ethereum. He's pretty hardcore into Bitcoin and doesn't really like anything else to my knowledge. So we got any other questions in the chat? So somebody said, do I personally use the Lido, Curve, and Yearn systems as showed in the previous videos? So the answer is yes, not in a super material way. So what I mean is yes, use the applications and the ecosystems, but not with like my large amounts of money. So that doesn't mean that won't change over time. I try to be super clear about this in the videos that there's a lot of stuff that I think are game changers that need time before you can comfortably do it with large amounts of money. I mean, I have just for brief periods of time, especially when I was trying out yield farming, doing a lot of experiments with this. But I'm not going to take like my entire ETH stack and then like put it in Lido Finance and, try to take it and leverage it and use it in DeFi. So why would I think that's awesome and talk about it, but not personally do it with all my money? Well, that's a good question too. So some of the things I think are just game changers because they're pushing the envelope and will get better over time. So like I was saying, it will be safer to do it. But there are also things that are good with technology that still at the end of the day, like I don't think is that I wouldn't necessarily personally do, but it's good that the features are there because it's showing what is possible and it's giving people options who want to do it, the ability to do it. So, for example, like doing leverage trading, I don't personally do leverage trading. I don't think most people should do leverage trading, but the building that feature into a trading platform makes it more robust, makes it, better. There are some people who can do leverage trading and actually pull it off with appropriate amount of self-control. So I think it's good for those platforms to have it, but, I don't think most people should be doing leverage trading. They're going to get absolutely wrecked. That's why. But at the same time, stuff like, Lido, Curve, and, Yearn, even at the risk level that's currently there, I could do it with a portion of the funds, not necessarily everything. Somebody says I get wrecked with leverage a lot. Yeah. You'll get absolutely wrecked with leverage. Okay, so let's see any other questions. So somebody mentioned somebody asked actually a pretty good question. I want to answer it. Somebody says, "Can you use a flash loan to become an ETH validator?" If you could find a way to like arbitrage your way into keeping those funds, I guess you could do that. But the thing about the flash loans, you have to pay it back instantly in the same transaction. So basically, like you can never do a flash loan. Like a flash loan's only there when you can extract value out of something. Like you can't just take out a flash loan and then like just have the money and go do stuff with it. Like you have to just be able to capitalize on the opportunity instantly. And that's typically how it works, like arbitrage or doing leverage in DeFi. I mean, I guess if like you could do it one, if you could arbitrage enough money to become an ETH validator. Or number two, you could leverage enough money to become an ETH validator. But if that were the case, you would typically have to own more than 32 ETH worth of value in the first place. So it don't seem like it'd be worth it. So last thing I want to talk about is the ThorChain exploit that happened yesterday. So Again, I have made videos on Thorchain in the past. I think it's an awesome project, but like I said, I try to be super clear in these videos. Like, all this stuff is really early technology. You need to be really careful if you're going to use it, if you're going to put money into it. I think it's important to test this stuff out in production because it is like the only place that you're going to find out about vulnerabilities and all that kind of stuff. That being said, I think we should also be very careful what we actually put in production. So Thorchain was exploited yesterday. I don't see all the details on the incident itself. My quick understanding of just browsing Twitter and seeing what people were talking about was that basically it seemed like somewhat white hat, where essentially the exploiter could have taken way more money, but like sent a message that was like, hey, we took this amount. And like, I guess they're trying to do a bounty or something like that. I think that they were really trying to get a point across rather than just try to, just take a bunch of money from them. And they were basically saying like, you shouldn't be shipping stuff that's not as audited, that's controlling like 9 figures worth of cryptocurrency inside of it. So I don't have all the details on it really. I'm just kind of, reciting off the top of my head what I browse on Twitter. But anyways, if all that's true, I think it definitely makes sense to slow down and test stuff. I've talked about this a lot on my channel in the past, not as much recently because the audience has changed a little bit, but yeah, it's really important to test everything in blockchain. There's a lot of pressure to put projects out now so that you can get users and go to market. But the thing about blockchain is it's such there's so much money that flows through this stuff that you always want to get insane levels of auditing. And I know that's really hard right now for projects that want to go to market because there's a huge bottleneck. Like, there's not that many auditors, not many good auditors at least, and it's nobody wants to say, hey, well, you need to wait 6 months before you launch so that you can go through a thorough audit process. And nobody wants to say, hey, you have to pay but I mean, it depends on how big the project is. Like, you might pay like $1 million like to get something really big audited. So that's a deal breaker for a lot of people, but it's the unfortunate reality. And you definitely need to know like what you're getting into as a user and what the audits have been or lack thereof. So I think that transparency is also important. So what is Thor? So Thorchain is basically, it's kind of like a Uniswap across multiple blockchains. So Uniswap lets you trade tokens and have liquidity pools in the back end where people can park their funds inside of it to provide liquidity to the protocol and offer, earn a passive income reward that way. So Thorchain is kind of the same thing. But like on Uniswap, you can't trade Bitcoin for Ether unless you're using wrapped Bitcoin. With Thorchain, you could trade native Bitcoin for native ETH cross-chain with that protocol. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You go to my YouTube homepage, find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a massive shortcut entirely and actually become a blockchain master step-by-step, start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. That's the next time. Thanks for watching.